Ever wondered how some traders consistently make profitable trades while others struggle to break even? It's not just luck or a magic trick, it's about understanding the concept of smart money. In the world of stock trading, the term smart money refers to institutional investors, hedge funds, big-time traders who have better access to information and resources than the average individual trader. It's these big players who often set the trends in the market. Consider this. You're at an auction, and there's an item up for bidding. You have no idea what it's worth, but then a well-known art collector starts bidding aggressively. You would assume that the collector knows something you don't, right? Similarly, in the stock market, when smart money moves, it's often a signal that they know something the rest of us don't. So, how does one track smart money? There are several ways, but one common method is by analyzing volume. Here's an example. Imagine a stock that's been trading at around $20 with average volumes. Suddenly, the stock starts moving up to $22, $23 with increased volumes. This could mean smart money is buying into the stock, driving up both the price and volume. Another method is to analyze the bid-ask spread. The bid price is what buyers are willing to pay for the stock, and the ask price is what sellers are asking for it. If the bid price suddenly moves up closer to the ask price with large volumes, it could be a sign that smart money is buying. Remember, smart money doesn't always mean they're always right. Even the big players can get it wrong sometimes. But they do have the advantage of information and resources, which can provide valuable clues to the rest of us. In conclusion, understanding smart money can provide an edge in stock trading. It's about observing the market, analyzing the trends, and making informed decisions. And while there are no guarantees in stock trading, being aware of how smart money operates can increase your chances of making profitable trades. So the key points to remember. Smart money refers to institutional investors and big players in the market. They often set the trends and can provide clues to other traders. Tracking smart money can be done by analyzing volume and the bid-ask spread. Smart money doesn't always get it right, but they do have the advantage of information and resources. Remember, in the world of stock trading, knowledge is power, and understanding smart money can be a powerful tool in your trading arsenal. Have you found this information helpful? Do you want to stay updated with more trading tips and strategies? Then don't forget to hit the subscribe button on our channel. We're here to help you navigate the complex world of stock trading. Remember, the more you learn, the more you earn. So join us on this journey. Let's make smart and informed trading decisions together. Happy trading!